Okay. All right. So here at Central Nervous Systems, we offer training classes that cover different topics each week. And those topics can be found, and the schedule of our training classes can be found at acumaticaengineering.com/acumatica-training. Something that is uniquely available to our customers, and it could be used for brushing up your skills, gaining new tips and tricks, as well as some initial training for any new hires or new processes that need to be learned by certain individuals. On the right-hand side here, we've got a brief schedule for the next 3 training classes. So today we have financial statement creation. Next week, we'll be looking at adding and maintaining employee information. We'll skip a week for the long weekend, and then we'll have on July 6th, accounts receivable review. So some pretty cool topics there. Every class is recorded and available, and we'll be posting those recordings to acumaticaengineering.com/maintenance-classes. The other opportunity here with these training sessions is that there is a chance to ask questions. So please use the question box, and we'll answer as many as we have time for. If we don't have time or we can't answer a question, we'll follow up with a blog, which will be posted to acumaticaengineering.com/engineering-blog. All right. So let's have a look at what we're going to be covering today on our agenda. So with financial statement creation, we're going to be touching on chart of accounts and account classes, the setup of those, and how they can play into making the reporting aspect of those easier. We'll have a look at report definitions, which sort of drive the logic behind each of the reports. We'll be looking at row sets and column sets, which provide information on the what, as well as from where and from when. We'll have a look at unit sets as well, and then we'll touch on some best practice options. So let's start with chart of accounts. So chart of accounts are accounts that are grouped by account types. They can be independent, and they can also be grouped by account classes. So the account type is what determines the direction or the sign on financial statements. It determines whether it's a positive or a negative based on whether it's an asset or a liability. And there are 4 account types. We've got assets, liabilities, income items, and expense items. So those play well into the balance sheet, profit and loss statements. Okay. With account classes, so account classes are available for convenient grouping, sorting, and filtering of information associated within the GL accounts. You associate accounts with account classes on the chart of accounts. Acumatica does provide a predefined account class that can be modified if needed, and you can always add new account classes. But if you do, you want to make sure that they're added to the financial statement. So if you insert a new account class to the assets section, you want to make sure to include that and add that to the financial statements and bring that information in. So let's have a look at Acumatica and what that looks like. So over here in finance, we're going to have a look at chart of accounts. So on the chart of account grid, we've got our account numbers and followed up with an account class. So we'll see that this first section with about 10 or 12 different asset cash accounts are all grouped or can be classified as a cash asset. And that's why they're all tagged with the cash asset account class. So when we report, we may want to get a total for the cash asset class rather than getting totals for each individual accounts. So there's the uniqueness there with being able to get grouped totals um, rather than detailed totals if and when required. Um, we'll also look at click into one of these. It'll open up our list of account classes. And here we've got a number of different classes, but the type of the account class will help determine what is the direction of that balance on financial statements. So they do work together. You are able to put, for instance, a liability into the cash asset section, but because it's a liability, it will show up as a negative value. And of course, you could put an asset into the liability section, but because it's an asset, it'll show up as a positive value or a negative value on the liability section. Um, so this type of scenario where you're using liabilities and assets or assets in the liability section might work on instances where people have GST and they want one GST count to roll up and show in one spot rather than having multiple reporting spots. So it would work to show a net amount. And another option where that works would be like, you have assets and then you have, depreciation showing net amounts. Okay. And then we'll go back to the accounts here. And so for those that are wondering if these account numbers matter, and in short, no. If the best practices are used and we're correctly attributing each account to an appropriate account class where possible, reports can be designed by the group and the number of the account doesn't necessarily matter. We do want to make sure that with best practices that we do have accounts that where we want to run a range of account numbers where needed in financial statements, that they are easy because if I were to say I want the total of account 10100 through 10900, it would work in this case. But if I had another cash asset that was say account 12900, it wouldn't pick that one up. So I would have to make sure that on the financial statement creation, I uniquely identify that I would like to also add account 12900. Okay, that's a brief overview on accounts and account classes, and we'll see how, again, when we dive into the report definition, how this works. So heading back to our report or our agenda, we're going to now talk on report definitions. So report definitions are basically identify the main report. They control the input parameters. It helps to define the report name and the location, and it's made up of row sets, column sets, and unit sets. So essentially, the report definition is the box that holds all the key components that make up and drive the report. So let's have a look at a report then. Let's have a look at a financial report. So um, let's have a look at a balance sheet. Everyone should be familiar with one of those. This is an old database, but balance sheet should still run appropriately for current month. All right, so now that I've run this balance sheet, we have at the top, report definition is going to dictate the company, the name, the parameters here. It's going to help identify what's going to be included and how it's going to be calculated, all within um, the driving components from row sets and the column sets. So if we were to look at this, edit report, it'll take us to the report definition page for that balance sheet report. And we see that the description is a balance sheet. It's going to use a specific row set and a column set. It's pulling from an actual ledger. And here the sitemap tells us where is this report located in Acumatica. So its title is the balance sheet. It's going to be located in the finance section under the financial statements. It'll also give us print margins. And it also has the ability down here to help us define what the parameters of the report are. So in this case, what ledger am I pulling from? And it's asking us to request that. The default's actual. It's going to ask us to request a start period. So for what period or as at date is this balance sheet going to run for? And we saw that right here. It's also going to look at whether we are going to include a unit set or not. These are all components that are going to the bucket of ingredients that make up this report. The next two components that are key are the row set and column set. So let's have a look at what those are defined by. So a row set is a set of rows to be used in a report or in a group of reports that all use the same rows. So you may have multiple types of profit and loss statements. They're all going to use very similar rows. We want sales, we want cost of goods, we want expenses. Similarly, we may want different types of balance sheets. They're all going to incorporate assets, liabilities in a similar fashion. So a row set can be used in multiple reports, and each report can be associated with only one row set. We'll see how that plays out when we look at our report definitions as a whole. The properties of each row specify how the data of the row is selected, calculated, formatted, and displayed in the rows of the printed analytical report. So over here on the right-hand side, we've got our balance sheet. This is the rows of information. Now let's look at the columns. So column set are used to define the set of columns to be used in a specific report or in a variety of reports that have a common layout. So a common layout might be on a balance sheet, we want to see the current year sums. We may also want to see on certain comparison reports this year and last year, or this month versus last month versus the previous month. So those are the those are the when and the where of the report. Again, every report can only be associated with one column set. When different reports use the same columns, you can create a single column set, just like with row sets. And the properties of each column specify how the data is selected, calculated, formatted, and displayed in the column of printed analytical reports. Okay, so overall, the row sets define what we're seeing, and the column sets define where that information is being pulled from and what date range or when that information is being pulled from within the database. Okay, so if we were to head back to our balance sheet, we see that, okay, it uses a D balance sheet as a row set, and for column, it uses D balance sheet P for the column set. So let's head over to report definitions, and we'll just show you what we were talking about in terms of multiple reports using similar row sets or similar column sets. So in this case, we see, I'm just going to sort by row set here. We see a number of different reports that use this DPL row set. So that is the what. And we'll notice that basically all profit and loss reports are using this DPL row set. So profit and loss, monthly profit and loss, consolidated, comparison by product, quarterly, they all use the same what. What information am I looking for? In this case, profit and loss, it's probably going to be revenues, cost of goods, and expenses. Okay? But you'll notice that each report has a unique column set. So when and where is the information coming from? So profit and loss, so this one might be the standard one, DPLP, but then this one here is by branch. This one is consolidated. This one's comparison. This one's by product. If we sort by column sets, we'll see if there's any that are duplicated. And in this case, it doesn't appear to be any are duplicated. So let's open up that balance sheet. So the balance sheet. So this is the row set for the balance sheet. So what information am I looking at here? And this is where um, the best practices come into play. So over here we've got, and you know what? I'm actually going to just take a copy of this one. Copy row set. We're just going to call this test. Okay, so now that I've copied it, I can mess around with it without causing any damage. So here we've got our assets. We want to look at current assets, cash, accounts receivable, short-term inventories, but we want these grouped. And so how is it grouping and where is it grouping this from? Well, it's looking at the data source of cash assets. Accounts receivable is looking at the data source of any account that has AR as the as the class. WIP is going to pick up anything that's WIP and so forth. So this is how account classes really work in your favor in having information easily pulled into a financial report. If my cash assets weren't grouped into an account class like they are here, I would have to, manually, go in and figure out, okay, well, what accounts are there or what classes do I need to choose to roll up that full information. And then down here, so this is my caption, and this is a GL type. So a GL type is pulling information from the general ledger. A caption is just like a title. And so we've got a title for assets, a title for current assets, which aligns with, if we head back to the balance sheet and we run it, so there's my caption for assets and current assets. And then these are the GL pieces. Okay. Down here, I've got a total current assets. And what is it? It's the sum of these codes. So I want everything between 100 and 196 to be summed up, and I want a value for it. Same thing with our liabilities. We've got GL information being pulled based on class. And then over here, total assets, sorry, these are long-term assets. So over here, I've got my line 198 plus the sum of everything between 205 and 235. So sum between 200 and 299. So that way, if I were to go in and insert another line here, I could do that right here and label it as, say, line 240. And maybe it was, Another long-term asset. You know, maybe I wanted to separate um, other types of equipment or other long-term assets in here. I can create a new account class, insert a line over here, um, call it number 240, pull that account class in, and it would still sum up and include those figures into this total assets value. And similar fashion with the liabilities, everything again is being pulled by account class. Okay. So now let's have a look at the um, column sets, because that defines the when and the where. So if we look at report definitions again, let's look at this D balance sheet column set. So now this is the when and the where. So it's telling me in this particular case, I've got the top portion and then the bottom portion. Well, the bottom portion, we see where this information is coming from by use of GLs. And then we also have some calculated columns. And it's all going to be pulling from the start period here, -1, and then a variance. This is the comparative one. Maybe we should look at the non-comparative one. All right, so this is our basic balance sheet. We want everything to pull in from the GL, and we want ending balances from the data source. So this is the where is this pulling the information from. And then we've got our formatting and width options as well. You'll notice that for a basic one, we've only got essentially, um, you know, one column that defines sort of the title and the information, and then one column that defines the balances or the GL figures. If we go back and we look at that comparative one again, it's going to give us extra columns that calculate the variance and the variance percentage. The last thing that we want to go over, and we're going to try and maybe create a new couple changes to a report here, but the last thing that we're going to see here is unit sets. And so let's go back into Acumatica, into our agenda and see what unit sets talk about. So unit sets are used to organize data from different data sources. So in your organization, you may have a specific set of product line that you want to group um, products into, maybe electronics versus retro games versus, in this case, consumer goods, electronics, food items, and so forth. Those are all different product line categories. There may be also departments. So that you want to categorize and do a P&L on. So you may have, auto sales, you may have part sales, you may have, those two departments that you want to run reports on separately. And then, of course, you've got consolidation as an option. So you may have multiple companies within the organization and you want to consolidate some data. And so getting all that information grouped in and through is important. So let's see how that is used in the balance sheet report. So if we look at this unit set and we say, okay, well, what is product? Product is looking at, we've got all products, and then we've got, what are these codes based on? So consumer goods data source is when the sub-account is con. For food items, it's when the sub-account is FDI. So using sub-accounts for those GLs that start with a unique identifier would help categorize the information that flows through by product line in this case. Let's see if there's a different one in here. We've also got branches, I believe. So branches, we've got a, we've got product branches and we have services branches. So the products branches have a retail and a wholesale division. Well, those are defined by branch product retail or product wholesale. The same thing with services. So we've got service east and service west. Those are going to be defined by the branch. And let's look at subs. So here we've got US consolidation and EU subsidiary. That's going to be coming from different ledgers. One is the actual ledger, one is the EU actual ledger. So that information can be pulled in to help better define and categorize what information we're looking at the column level. Okay. So let's dive into a row set and see if we can make some changes or updates. So let's look at, instead of a balance sheet, let's look at a profit and loss. So profit and loss right now is using the DPL. So if I copy this row set and we call this test DPL. So if you wanted to make changes, a good best practice is definitely going to, take one that works. You know that the information is solid. Take a copy of that. Don't make changes to your live definitions. Take copies of ones that you know are working well, and start from there as a testing. And then once you are able to finalize whatever it is that you're changing, you can always then remap that report or a new report to that new row set or new column set. Okay, so I'll just start by saying always use a copy to make changes and test before going into live, and doing that with live row sets and column sets. That is a best practice. So again, captions are like titles. We can make changes to that. Another good practice here is you'll see that it starts with code 50 and then goes to code 55, 60, and 99. Well, the reason these go with 5-point increments is so if we needed to create any subcategories under revenue, maybe we wanted to more clearly define, okay, what type of revenue is it? Retail sales revenue, wholesale revenue? We would be able to do that very easily by saying, okay, well, line 56 is retail revenue, line 57 is wholesale revenue, line 58 is international revenue, and then we can pick up those components and get some more detailed information there. Whereas if you had if this was just line 50, 51, 52, you would have to go through the process of renumbering all these codes so that you can create room for yourself. So certainly one of the best practices here is to give yourself room between your reporting lines. Okay. Another best practice, so that you can make sure that you're reviewing all of the data, how it's coming through, is to open up and not suppress or hide any zeros, so that when you trial the report, all of the information will come through, and then you can say, okay, this information is correct, the totals are coming through as I expect them to, And then you can go through and start suppressing what you don't need to see or hiding zeros where you don't need to see them. But it's always good to unhide them first so that you can be sure that the information is coming through, even if it is a zero. Okay. All right. So here we've got this new column over here, not new. Um, so linked row. So this line here is linked to row 102. Well, basically what that means is that regardless of where the reporting plays out in terms of what is above this line or what is below it, line 101 is always going to be linked to line 102. So it's always going to be right above the total sales revenue. And then right underneath it, of course, is going to be um, the total. Okay. Another thing here is that there's options to increase the width or the height of each row. So this really helps with spacing and organizing and formatting for the most part. But some pieces are indented, so we see that when there are details that come through, those get indented. And then when there are captions, those are not indented, so zero indent. Okay. And then there's always options to put lines, and so we've got solid lines, we've got dashed lines, double lines, groove lines. So always, have a look at what those are. But the standard obviously is a solid line or a double line where you're getting full totals. Let's see if there is a double line here. So gross profit right underneath that. Okay. So that's our row sets and some of the options there. And now let's look at column sets, but let's do something that is uh, like a rolling one. So there's multiple. So over here. So again, this is the column set is defining, the range of information. So the start and the start and the two dates, essentially, when we're looking at financial statements. So first I've got my description column. So it's my profit and loss. It's my as of. It's giving me the information that make up the basis of what this report's being run for. And then over here, because this is a rolling 12-month, I have a column for each of the 12 months. So it's column, 1, 2, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So I've got 14 here because I've got a total. And then I've got a baseline month. Okay. And so I'm going to copy this set. And we're going to just call this test DPL 12. Beautiful. So everything in this top header portion has its own unique column. And so you'll want to make sure best practices is that everything that's in column B as a header will align with what is in column B as the details. One thing that you'll want to note is if you add a column here, that added a row. I don't want that. If we add a column, we now have this column P. If we move the top section, it does not move the bottom section. So you'll want to make sure that whenever you make changes to the top section and move things around, you're also doing the same to the bottom section. So I'll move this back, and so that these shift back over where they were. And I will delete this column because I don't, well, I just added a new one by the looks of it, but so for each of the columns, I've got my reference to the parameters that are being entered. So there's a parameter on the P&L report that asks, well, what's my starting period? So my starting period is going to be in the first column here, and that is going to be defined by start period. As we move down for each column, because it's a rolling 12 months, it's going to be my start period -1, -2, -3, all the way down to -12. Should be over here. And then I give myself a 12-month total. So where is this information coming from? So down here is where I format the information that's coming through from the GL. So I want my cell evaluation to be done by rows. I want no rounding. I want my format to be in 2 decimal places. I can define the width of each column. I can choose to suppress or hide zeros. In this case, because it's a P&L statement, we may want to show all the information, even if it's a 0 for each row. Down here, we can choose whether or not that column is visible or not. So in this case, I've chosen to say if my start period, if the first 2 digits equal 0, then I don't want to see this column. It's just a make sure test. My style is to make sure that all of the numbers are formatted right justified. And then down here, I start with turnover as the data source. So that's going to be defined by the amount type. So I've got my turnover, I've got beginning and ending, but because I've got my starting data source as turnover, down here, I just say, okay, let's go backwards 12 months. So 12 months -1, turnover, offset year, offset period. So because it's a month, I'm going to leave my year as 0, and I'm going to offset by -1, and so forth, all the way until I get to -12. So essentially, each of these 12 columns are going to be the same, except for our totals. Totals is where I'm going to make use of an equation. And the equation is basically adding all of columns B through N. That's my rolling 12 months using turnover. So that is the when and the where of the report. Let's have a look at another. Let's have a look at something with a comparison. Profit and loss comparative. So this is, again, less columns, but there are some comparatives. So for each of the comparatives, we're going to have some GL information, and then we're going to have some calculated information. And so my GL information, I'm looking at ending balances here. So for this particular case, I've got report for the start period. And then this is start period -1. So I'm comparing this year versus last year. I'm pulling information from the GL. And again, I've got my formatting options. But at the bottom here, I'm going to look at my ending balance. And then I'm going to offset that by 1 year, not 1 period. I want to get my variance. So my column D shows what's the percentage. How that's calculated, because it's a calculated column, is to look at column B minus column C divided by column B and show me that as a percentage. And we'll see that there's no data source for that because it's calculated. Okay. And then this is period to date. And again, I've got a calculated amount. So that's column sets. Let's have a look at, again, let's have a look at this report definition. And so this is again where the branches and the unit sets are going to be defined. And so because we only went over those three, those are the only three available, and they'll help better define what's going to be coming in through this report. All right, let's head back to our presentation. So again, just reiterating some of the best practices. You'll want to make sure that you use proper naming conventions and descriptions to easily identify your report definitions, row sets, column sets that are used, particularly where you have row sets or column sets that may be used by more than one report. You always want to use a copy when modifying and testing revisions. Don't do that stuff in your live. It'll come back to bite you. You want to frequently save and review your progress. Don't make too many changes. I would make one or two changes, review the output, make sure it's good, move on. It's kind of like a big Excel sheet that you don't want to mess up your progress on. You'll want to make sure to use your row set codes with some spacing so that in case you need to more easily insert additional rows. And then account classes. Use those to the maximum availability because they will save you an immense amount of time when modifying and updating your row sets. And also, whenever new accounts are created, be sure to assign an account class to that account so that you don't need to then go and modify each report to include that account class or that new account. All right. So we had a chat on chart of accounts, account classes, report definitions. We looked at row sets and column sets and what we can do there in terms of what they have to offer. And we touched on unit sets in terms of grouping the information or being able to report on different product lines, different departments, different regions. Doesn't look like we have any questions today, so that will wrap up our demo. And to wrap things up, again, I'm just going to make note that there's a different training class every week here at Central Nervous Systems. You can find the full schedule at acumaticaengineering.com/acumatica-training. On the right, you've got a snippet. Next week, please join us for adding and maintaining employee information, followed by account receivable review on July 6th. Please be sure to join us. Well, thank you and have a good day.